one thing that I've been thinking about recently is that after 3+ years of back to back to back 20% up moves, I do think we are due for a less than stellar year. These markets have had a huge move over the past 3 years. The SPY has gone from 381 3 years ago and is now at 680. We've had three back to back to back really good years in the market. We are due for further sideways to down action. So it's very possible that as we have been trading in this sideways range over the past 2 months or so, that we are forming some type of top here. There's an old adage in technical analysis that tops form, bottoms happen. And this may be some type of topping formation that we're seeing in the markets. We just don't know. And the fact that the cues that have been leading to the upside are now having a lower high may give some type of indication that the market as a whole is forming some type of short-term top that can go into some more elongated downside corrective state throughout all of 2026 or throughout most of 2026. If tech continues to underperform and money continues to rotate out of tech, if that goes on long enough, because these tech stocks make up such a big portion of the major indices, it will eventually create more corrective downside action in the market. It's just the way it is. And the fact that the Fed is cutting rates, that's good for big high debt biotech stocks that are, developing new medicines. That's big for, new startup small cap companies that have lots of debt in them. And it's good for financials because the yield curve is steepening, and that's why money is moving out of big cap tech into healthcare stocks, biotech stocks, financial stocks, and so on and so forth. So that explains the move when you have that steepening of the yield curve and short-term interest rates fall. So going forward, this sideways back and forth action that we have seen can continue. But keep in mind on a bigger picture that we may be forming some type of top after 3+ big gain years in the markets. We're on pace to have 17% to 18% year-to-date return on the SPY after 2 consecutive years of being up over 20%. So we may actually be up 3 consecutive years over 20%. I mean, it's crazy. And after that big of an up move, it makes sense to have at least a half a year where you have this back and forth downside type of corrective tape action in the market. Take a look at the SPY here, and I'm going to zoom in. We've had these corrective years in the past. I mean, it happens on a regular basis. Here we had it in 2022. So I'm not looking for some all-out crash, but some back and forth type of corrective tape action. This is 2022. This is a back and forth corrective type of period in the markets. And as you can see, lots of back and forth corrective tape action. We had some choppiness in the beginning of the year. Market didn't do anything. We had a rally, then we had a big sell-off, then we had a rally, and we had corrective back and forth tape action in 2018. And it kind of resolved itself in 2019. We go back about 4 years prior to that, back to 2014 and into 2015, and the same thing happened. Corrective back and forth tape action in the market. Every 4 years, give or take, where the market has this corrective back and forth type of action. And this 4-year cycle, give or take, has been very prevalent in markets ever since the financial crisis and crypto started. Something to keep in the back of your mind as we go into 2026. And before that 2011 to 2012 period, you had a period of sell-off But this was mainly this involved the flash crash in 2010. So I don't know if you want to categorize that as a black swan type of sell. So there are other sell-off periods other than this 4-year cycle, but there is a 4-year cycle of choppy sideways corrective action in the marketplace. So that is just something to keep in mind as we go into 2026. We're at that 4-year cycle, give or take.